Welcome back. Big news this morning from OPEC. OPEC Plus announcing it is cutting production targets by nearly 100,000 barrels a day through October. This is an effort to get prices back up. As you can see, market's not moving all that much, but still prices below $100 a barrel. Joining me right now is Belpointe chief strategist and host of the Money Runner podcast, David Nelson. David, great to see you this morning. So now we see the pipeline shut off indefinitely. What's your take on the impact on Europe?
We saw it play out yesterday. You saw, nat gas futures were up as much as 30% intraday. They're down today, but Putin continues to use energy as a weapon. Germany and the rest of Europe ceded their energy future a long time ago, in part turning green too quickly and maybe not smartly. We're obviously better off here in the United States, but I see here in the United States the administration making some of the same mistakes. We seem to have a policy and a plan for 2035 and beyond. But what's the policy for right now? What's the policy for the next 10, 15 years? Any rational view of a greener society has to include increased fossil fuel production and energy infrastructure, at least until these other projects can start to scale.
Well, what's your take? Here we are on the final push, the kickoff to the midterm elections. We've got the final push right now into that and the rest of the year, fourth quarter. Bank of America is warning investors of, quote, recession shock as the Federal Reserve works to fight inflation. David, your take on where we are in the macro story. We'll get the August Consumer Price Index out next week, the September Fed meeting later on this month. Do you think we will see a 75 basis point hike? And what's your expectation for the economy?
I'm looking for 50 at the next meeting. I think if you asked me a week ago, my biggest concern, it would have been the Federal Reserve and the tough talk from Jay Powell. And the longer, higher for longer rhetoric. The stock market certainly bought into that, and stocks have retraced pretty meaningfully. Bond market, not so much. Bond investors understand that the Fed is limited here and that this is not just a demand problem. Since Jackson Hole, Fed fund futures show the terminal rate is only up 10 basis points, and we're still looking for cuts in the back half of the year, in part because I think, bond investors understand with the federal gross debt at 120% of GDP, the highest since World War II, there's only so much the Federal Reserve can do. This is not just a demand problem. This is a supply problem as well. And I don't think they're going to push as far as people expect.
So look at where yields are. We're looking at yields move higher this morning. We've got a rally in stocks up 200-plus points on the Dow Industrials. How do you want to allocate capital right now going into year end?
I think there's two themes that I'm working with right now. Obviously, energy is one of them. We just talked about it. There's a reason why Warren Buffett is taking out Oxy. He can do the math. The free cash flow yields in some of these stocks, like Oxy, Pioneer Natural Resources, 9, 10, 11%. It's kind of a no-brainer. Other investments I'm making are kind of thematic. I'm looking to a company like T-Mobile. Elon Musk is partnering with T-Mobile in part because Verizon has fallen behind on technology for 5G. T-Mobile has the better platform at this point. I'm a Verizon customer, and I've been a customer for 20 years, and I'm thinking about shifting. And if I'm thinking about shifting, there's others as well. There's a market share opportunity here.
Yeah, so you're looking at dividend payers then. You want to get that income while the macro story is uncertain.
Certainly, that's the energy play. You're getting the dividend income, but you're also getting this free cash flow yield. It's hard to ignore, especially in a challenged environment like we have right now. We're going to probably have to take a haircut to S&P earnings. Might have to go as low as $200. If you do that, obviously, it makes it a tough environment for stocks.
All right, David, great to see you this morning. Thanks so much
Thanks for having me.
for weighing in. We appreciate it. David Nelson joining us this morning.